Hello everyone. Today we're going to discuss how to reduce your student loan payments. Now, as many of you know, student loans can be categorized into two main categories: federal loans and private loans. The biggest difference being federal loans are funded by the federal government and private loans are funded by entities such as banks, credit unions, state agencies, or schools. For the purpose of this discussion, we will be talking about federal loans exclusively. Now, if you don't know what type of loan you have, you can go online to the National Student Loan Data System, or you can call the 1-800 number listed below. If you're having trouble repaying your loans, you have two choices. You can postpone payments altogether, or you can lower your payments. If you'd like to postpone your payments altogether, you can opt for two choices: a deferment, which allows you 3 years of no payment, no interest accrued, and it's usually for people who are going back to school or joining the armed services. Or you can opt for forbearance, which gives you a year of no payments, but interest does accrue. The second option of lowering your payments can be done in one of three ways. You can restructure your loan to extend the term. You can restructure your loan to escalate payments over time, paying a little on the front end and a lot on the back end. Or you can reduce your payments based off of income. Now let's take a look at some of the plans that may help you reduce your monthly payments. First, the standard plan. This is the plan that everyone is placed into immediately when your loan comes due. This plan is paid over 10 years, or 120 equal payments. If you find that the standard plan payments are too much for you to handle, then you can take a look at some other plans. Let's focus on the graduated, extended fixed, and extended graduated. All these plans essentially either extend the term of your loan or reduce payments on the front end and raise the payments on the back end in order to allow you to lower your payments. Note, in all these cases, you will be paying more interest than under the standard plan. The next category of repayment plans will allow you to reduce your payments relative to the standard plan based off your income. You will have to submit your tax information to your loan services provider, but most of them will be some percentage, anywhere between 10 to 20% of your adjusted gross income, and any balance not paid after 20 to 25 years will be forgiven. In order to see what your new lowered payments would look like under any of these repayment plans, all you have to do is go to the government's Student Loan Repayment Estimator website. The link is below. Once you arrive at the Federal Student Aid Repayment Estimator website, you can either log in or you can proceed without logging in. We're going to proceed without logging in. First, you'll key in your loan balance. For the purpose of this demonstration, we'll just key in one loan and we'll make it a direct subsidized loan, and we'll say the balance is $100,000. And we'll say our interest rate is 6%. You can add more loans as you see fit. Then we'll select our tax filing status. We will say that we're single. Then we'll put in our income. Our adjusted gross income we'll say is $45,000. And then we'll say we're a family size of 1. And we will say that we reside in the state of Virginia. And then we'll calculate all of our new payments under the different plans. So under the standard plan with $100,000 worth of debt, over 120 months, our payments would be $1,110. And then you can see from all the subsequent plans that you will get a nice reduction in your monthly payment. The only caveat to that is that you will be paying more interest over the life of the loan. So take a look at these different repayment options, figure out which one's best for you, reach out to your loan service provider, and then you're on your way to reducing your student loan payments.